As you guys already know, Gary Gensler stepped down before Donald Trump could fire him, and this guy, Paul Atkins, replaced him, and this is what he's saying.
I want to say that it is a new day at the SEC. I'm determined that we return to our core mission that Congress set for us more than 90 years ago. The SEC's three-part mission, as the chairman stated earlier, was enunciated by Congress in the Exchange Act, and that's investor protection, which is vital to our mission, holding accountable those who lie, cheat, and steal. Capital formation is also at the root of what we do, fostering a direct economical route for investors' capital to find its way to entrepreneurs and industry to create products and services. And the third core part of our mission is maintaining fair, orderly, and efficient markets. Congress calls on the Commission to ensure that our regulations balance costs and benefits, that they do not become too burdensome by adding needless friction to the marketplace, thereby undermining the capital formation that yields so much benefit. My time in public service and in the private sector has allowed me to see firsthand how regulations affect markets and investors. They can stoke innovation, facilitate investment goals, and create opportunities or burdens on businesses' ability to compete and to serve their customers. How we implement regulations at the SEC is crucial. It's one thing to write a regulation, quite another for it to achieve its intended goal. Regulation should be smart, effective, and appropriately tailored within the confines of our statutory authority. A key priority of my chairmanship will be to develop a rational regulatory framework for crypto asset markets that establishes clear rules of the road for the issuance, custody, and trading of crypto assets while continuing to discourage bad actors from violating the law. Clear rules of the road are necessary for investor protection against fraud. Policymaking will be done through notice and comment rulemaking, not through regulation by enforcement. The Commission will utilize its existing authorities to set fit-for-purpose standards for market participants. The Commission's enforcement approach will return to Congress's original intent, which is to police violations of these established obligations, particularly as they relate to fraud and manipulation. The SEC is returning rulemaking to regular order. Our comment periods will not be artificially short, and the public will have ample time to provide feedback. The SEC will also be sure to take into consideration how rules overlap and how regulatory burdens build, in keeping with our obligation to consider their costs and their benefits. There will be targeted, common sense reorganizations to come at the SEC. To start, I'm seeking approval from Congress to disband what's known as FinHub. Its innovation should be ingrained into the culture SEC-wide and not limited to a relatively small office. We've begun a process to review our technology infrastructure and our contractual obligations. So to close, we will work with our colleagues in the administration, especially other financial services regulators, and with Congress to bolster the economy and build on U.S. leadership of the global markets. This SEC will take every effort to ensure that the United States is the best and the most secure place in the world to invest and do business.
And so under Biden's administration, they were extremely hostile towards crypto. And regardless of macro market uncertainty with the Federal Reserve, interest rates, what they're doing with the effective federal funds rate, well, regulation is not just coming, it's here. David Sachs said stablecoin legislation is about to pass the Senate. And with a 60-29 vote in favor of the Genius Act, this shows that Congress wants clear rules of the road for crypto. So it's only a matter of time. Listen to what Kevin O'Leary is saying.
They're debating right now the Genius Act, which involves stablecoins. Here's what Elizabeth Warren said, and then I want to get your reaction on the other side, Kevin.
For the first time in American history, this bill will make our president, Donald Trump, the regulator of his own financial product.
Now, there has been bipartisan support for this, but that's the argument on the other side. What would you say to the senator?
Well, first of all, let's talk about Elizabeth Warren. She not only has Trump derangement syndrome, she has crypto derangement syndrome. That's a powerful cocktail of confusion for her. This bill has nothing to do with Trump. This is a digital payment system that establishes the U.S. dollar as a default currency around the world for price discovery on every commodity on earth. Why wouldn't she want that? Why wouldn't every American want that? This is the definition of what currency will be in digital payment systems. If we don't want it, the Chinese will do it with the yuan. You don't want that. This is a chance to move forward a technology that's incredibly productive for digital payment systems, large and small businesses alike. What she's doing right now is un-American. She's trying to tie this bill to Trump. It has nothing to do with meme coins, nothing to do with Bitcoin.
There are worries, though, about the family business and some of the properties and stable coins within some of those.
All is fair in love and war, in particularly politics, but this is completely deranged what she's doing. As we speak, she could stymie American technology and advancement on digital payment systems, which has nothing to do with Trump.
So we don't know if she actually feels that way or if she's getting paid behind the scenes, but there's nothing she can do to stop what's coming. And if we look at the Bitcoin price chart on the weekly, we can see that the stochastic RSI, well, the K line's at 100, the D line's at 89, so we haven't witnessed a bearish cross yet. So it reminds me similar to what happened back here during last bull run cycle, right before we saw a minor correction and then the final peak in the bull run before we went into a bear market. So I think whether we push a little bit higher, like let's say we push to 110 or 120, I do think there would be a little pullback, and then for us to see a blow off top for later this year, and then we go into a bear market. Unless we see that pullback happen now, I still think there is a push higher, and you have to be ready for it, because when that breakout takes place, retail are going to start flooding back into the market, guys. For example, if we go to trends.google.com and we type in Bitcoin and we sort based on the past 12 months, you can see that the interest is starting to tick up a little bit. Since April, it was at 29 out of 100. Now it's at 43, but it's far off from where it was between November of 2024. And even if we go over the past 5 years, it's at 31 out of 100 right now. So I don't think we're at the top until we start getting upwards of, 60, 70, or 80. As you can see in November 2024, we were at 72 out of 100. Compare this back to 2021, these levels were all the way up at 100. And so we are starting to see a recovery in Bitcoin right here, but it's not coming from retail investors, guys. This is coming from institutional buys. Even Bitcoin's at an all-time high, but yet retail interest is at 30 out of 100. So this shows that retail still does not care until Bitcoin starts breaching above 110, 120. Then they're going to start coming back into the market, and then we're going to see Google Trends really start to rip to the upside. And if we search altcoins right here, you can see altcoins are at 10 out of 100. So no one really cares. Back in December, they were 58 out of 100. At the peak of the market in 2021, in May, it was at 100 out of 100. And then by the end of 2021, at the double top, it was at 77, 76. So the altcoins aren't going to peak out until this is upwards of well above 50 at least. And one of those altcoins that everyone's going to start putting money into, other than Dogecoin or Solana or Sui or Ethereum, is XRP. And XRP is sitting at $2.37 on the daily. If we look at the stochastic RSI right here, it's at 32 and 23 for the K line, the D line. We're still in a downtrend on the stochastic RSI. We saw a bearish cross right here. And so this is similar to what happened right around here between the end of August of 2017 until the beginning of September, when XRP saw this breakout from the low. The stochastic RSI experienced a bullish cross down here below 20, comes all the way up above 80, bearish cross, another bearish cross, the stochastic RSI resets, the price comes all the way back down within this zone of support right here at about 14, 15 cents, forms a bullish cross below 20 again, and then reverses back to the upside. So this is what we look for. So because we're in a downtrend on the stochastic RSI, I would want to see it come all the way down here below 20 and get as close to zero as possible for both the K line and the D line. We're at 32 and we're at 23. So yes, XRP could bobble around here for a while. It could even push higher if Bitcoin starts to break out, seeing a reversal on the stochastic RSI, but eventually I would want it to come back down below 20 to consider entering into XRP, because the risk to reward ratio in the middle of a range on the daily chart right here is just not there. There's just too much risk to the downside, because if XRP pulls back with Bitcoin, it could come all the way back down within this zone of support, similar to what happened here after August of 2017 until September. XRP dropped about 47%. So from the recent local high on this breakout of about $2.65 to pull back within the zone is roughly 20 to 30%. That's where I would want to accumulate more XRP, while the stochastic RSI would be down here below 20, and we would see where the relative strength index would be at that point. As you guys can see, the RSI doesn't need to be below 30 to get a good entry point. That's why we use confluence with the stochastic RSI, because on that pullback, it brought it back down to about 37 before it bounced on the relative strength index in the past. Right now, the RSI is at 53, so it's in the middle of a range. So we accumulate when the RSI is very, very close to 30 or below it, and the stochastic RSI is all the way down here below 20 on aggressive pullbacks in the market. Or we wait for breakouts and back tests of previous range highs, which in this case would be like $2.65 for XRP. That's the most recent high. So unless we clear that high and hold it as support, we could just see something similar to what we saw right here, which would be, washing machine price action for XRP before a sell-off to the downside with Bitcoin. So watch the stochastic RSI. If I just circle, when we were down here below 20 for an extended period of time, it was on these pullbacks for XRP on the daily chart. And so we're almost there, but we're not there yet. Subscribe to the channel, and I'm going to keep covering this for you guys, and I'll point it out for you. Just like I pointed out right here when we were down below 20 for both the K line and the D line on the stochastic RSI, and the price was at $2.08. Ideally, we wanted to see it dip within the zone before breaking out, but you can't get too greedy to the downside. That's why we use these indicators. So if you plan on just holding XRP long term, then yeah, $2.37, it's not bad, and I think XRP will actually outperform Bitcoin the rest of this bull run cycle. And I'll explain why in a little bit on the Bitcoin dominance chart. But Canada ended nearly all of their retaliatory tariffs on the US, and we're seeing these other countries negotiate with the United States, causing less uncertainty through the trade war. Also, Robinhood is also acquiring Bitstamp, which is building a perpetual DEX on the XRP ledger, and Robinhood submitted an SEC proposal to regulate tokenized real-world assets, aiming to bring Wall Street on chain and unlock a $30 trillion market. Plus, StraitsX launched its Singapore dollar pegged stablecoin XSDG on the XRP ledger.